Two dividend ETFs, same goal. Give you passive income, but completely different methods. SCHD is going to be your boring and reliable dividend ETF, while MSTY, also known as MSTY, is going to be the YieldMax MicroStrategy Option Income Strategy ETF, and it's going to be wild and high octane. So let's compare both of these ETFs and figure out which one is the right one for you. So SCHD is going to be the US Schwab Dividend Equity ETF that we all know and love, boasting a low expense ratio of only 0.06% because this isn't a passively managed fund. It's going to track large cap US companies with strong dividend history. Think Pepsi, Coca-Cola, Verizon, and Home Depot. And you're always going to have a dividend yield somewhere between 3.5 to 4%. So it's going to be a fairly low dividend rate compared to MSTY. Now, unlike MSTY, this is going to be a straightforward low-cost fund offering potential tax efficiency. And this is going to track an index focused on the quality and sustainability of dividends. And it invests in stocks selected for fundamental strength relative to their peers based on financial ratios. So this ETF is going to have low turnover, low fees, and great long-term growth. Now let's take a look at MSTY. MSTY is the MicroStrategy MS Option Income Strategy ETF. Now I do have to note that this ETF does not directly invest in MSTR and it holds no MicroStrategy stock. It only uses call options against it, which is going to be known as a synthetic covered call or a poor man's covered call. And the purpose is to generate as much option income from volatility. Now, MicroStrategy is a very volatile stock, and that's why this ETF has been performing as it has, because it's going to collect a lot of income from those option premiums. Now, this ETF is not for the faint of heart. The performance is directly tied to MicroStrategy price movement, as well as the volatility. You want high volatility in order to get a high dividend rate. Now, if we take a look at SCHD's dividend information, we currently have a dividend yield of just over 4%, and what turns off a lot of people from this ETF is going to be the payout frequency with this, which is going to be every single quarter or every 3 months. But with this ETF, we can see the dividend history. Every 3 months, we're getting these cash payments, very reliable, very stable. We're going to compare it to MSTY. It's going to have a dividend yield of 128%, and this is going to change drastically. So this is not going to stay the same. It could go down to as low as 60% or it could go as high as 200%. It just depends on the market conditions, and it's going to be having a payout frequency of monthly. Now, this is perfect for people who are looking to supplement their income to help pay bills. And that monthly payout frequency is really going to help for a lot of people, and it makes this ETF very attractive for that reason. But if we take a look at the dividend history, we can see that it changes quite a bit. With the first payout was around $4, going all the way down to $2.50, jumping back to $3, $2, $1, $4, and so on. But overall, it has not dipped below $1 per share, and that's a really good sign showing that MicroStrategy has been proving to be a great ETF. And if we take a look at the holdings for MSTY, we can see that we do have quite a bit of treasury bills, and this is going to help with that dividend yield for a lot of people, because when this ETF does not trade any call options, it's going to supplement it with these treasury bills. So we can see that it does not hold any MSTR stock or shares. In fact, we only have a call option. And to make it synthetic, it's either going to turn it into a spread by selling put options, or it's going to have a long dated call further in the future to get that long synthetic position. So overall, this ETF is not going to be as diversified as SCHD because it's tied to one volatile stock, MicroStrategy MSTR. And it's going to be exposed heavily to market shocks as well as crypto sentiment. MicroStrategy is basically a leveraged Bitcoin stock company. We also have to note that it does have a high expense ratio of almost 1%. Because this is an actively managed fund and all of that expense ratio fees go to the fund managers. So this ETF is not meant for long-term holding unless you understand the risk. You don't want to put your full portfolio into this because it's not diversified as, say, SCHD. Now, SCHD, on the other hand, we can see the capital appreciation over time, 200%, and that's not including the dividends that we're receiving, which is around 3 to 4%. So this ETF actually has a total return closer to 350% with dividends reinvested since 2011. And that's what makes this ETF very attractive. It's for more conservative investors. It has lower volatility, great for capital preservation, and it's diversified across many sectors. If we take a look at the holdings, we can see we have Coca-Cola, Verizon, Altria, Lockheed Martin, Home Depot, PepsiCo, Texas Instruments, and so on. 100 high-quality dividend-paying stocks. Now with MSTY, these dividends are going to be taxed at a higher rate because they're going to be taxed as simply ordinary income. So whatever tax bracket you're in, you're going to be taxed that amount. We do have to note that it is going to have a mix of short-term gains as well as return of capital, but on average, you're going to be paying a lot more taxes than you would with dividends from SCHD, because SCHD's dividends are going to be qualified dividends mostly, so they're going to almost all be taxed at long-term capital gains rate. And this is perfect for long-term growth and income. Hold this ETF for years and reinvest the dividends, and it will reward you greatly. So SCHD is going to give you reliable growing income. It's very simple, long-term compounding, and it's great for people who are retiring. A lot of people in their retirement portfolios are going to own this ETF, and they're going to utilize a buy and hold strategy as well as dividend reinvesting with the dividends. People who are looking for more volatility are going to want to own MSTY. It's going to have huge price fluctuations as well as income fluctuations, but it's going to be something exotic, and it's not ideal for retirement accounts or beginners because it is quite complex. Now, if we compare the total returns year to date, we're actually up 30% compared to SHD, down 6%, SPY, the S&P 500 index, down 5%. So if we take a look at how much it's been returning, we're actually up 283% since March of 2024. So that's only like a 1 or 2 year time horizon. And then comparably, SHD is only up at 0.35%. And the S&P 500 index is 9%. So we can see that MSTY has drastically outperformed the S&P 500 as well as SCHD, both in the long and short term. But MSTY has only been out for about 2 years now. So it's a relatively new fund. We'll have to see how it performs in the future, but so far it has drastically outperformed both of these other ETFs. And personally, I own 300 shares of MSTY, and even though I'm down about 15% on the stock price alone, I have made way more money back from the dividends that I'm receiving, because as I mentioned earlier, it's about over 100% dividend yield. Overall, SCHD is going to be your stable paycheck, and MSTY is basically your side hustle in the crypto alley. Pick SCHD if you want peace of mind, and pick MSTY if you're yield hungry and understand the risks, or you can use a combination of both, but don't expect them to behave the same, and both are great options, just depends on your investing style.